All right, traders, the team and I ended up having a phenomenal trading session within Trader Society. Shout out to Top G. He made over $40,000 today. Shout out to Jim C. He made over $50K today. Shout out to Mo. He absolutely crushed it both ways with calls and puts. With that being said, I'm going to prepare you to trade the best setups, have the best prices heading into tomorrow. Make sure you guys watch the video that I posted before this. It shows you the live trading footage that I shared live on stream with my team, Trader Society. Go back and watch that live trading footage so you understand the strategies that we're using to scalp SPY. Let's get straight into the analysis. So we are in a phenomenal volatile channel market right now, and there's going to be great opportunity for tomorrow, and it's going to be an even better day to be trading on Friday. Fridays are known for being my best days of the week. With that being said, here's what I want you to understand. The way the chart is setting up is, it is setting up for an attempt to be a bullish micro reversal. And this is where they're going to try to bounce it. They're going to try to bounce it at these two key level zones. Where the SPY closed at 408.02, that's the first level where they're going to try to bounce it. If it goes under that, the second level they're going to try to bounce this is at 406.74. So what I want you to understand is, as long as the SPY is sitting in the zone between 406.74 and 408, if it continues to consolidate, bounce within that zone, forming support somewhere in that zone, it is bullish, and they will try to spike this if it holds in between that zone. And then if they could break above 408, form a floor, they will try to spike this back to this level, which is going to be 410.30 to 411 towards this previous support here on the 30 minute. Let's take a look at the 5 minute as well. So they will try to spike it back towards this 410-ish level if they can hold 406.70 to 408, right? So if you're seeing bullish confirmations on 30, if you're seeing floors form in, those are kind of the average prices where you kind of scale into calls heading into tomorrow, right? So look out for that. Now, what you need to understand is, for the bears to continue to go bearish, which I personally think is unlikely heading into tomorrow for the micro price action, but for this to go bearish and to fill the gap at 404.36, there's a gap to fill at 404.36. This is what would need to happen. We would need to go under, so it needs to crack under 406.70, needs to crack under this, and then if it spikes back up, forms a resistance level towards 406.70, or maybe a little bit lower, 406.50, it's forming lower highs, then it'll be bearish to fill the gap below at 404.30. Now, would that be something that I'm interested in playing? I wouldn't be interested in playing that, even if it looked bearish, because it's a poor risk to reward ratio. If it cracks under 406.70 and then it spikes back up and forms lower highs and resistance, it's bearish and it's going to start to fill the gap at 404.30, but I don't want to buy puts towards the bottom of the channel. If it had that reaction and I was in calls, I would cut my loss quickly. If it had that reaction and I wasn't in calls, I would sit on the sidelines and just wait to buy calls at 404.36. So that's my analysis on the call side. Now, let's discuss the put side. Best price for puts possible into this week if we get a crazy move up would be this 415.51 level. You have a gap to fill above with major resistance and big downside potential. If you can smash puts at 415.51, that's a great level for puts. And remember, in terms of swing trading, if you want to swing trade calls, you need a bullish candlestick on the daily chart at 404. If you want to swing trade puts, you need a bearish candlestick on the daily chart at 415, right? So we're focused on the high and the low of the channels, best price, best entry for swing trades. Write all this information down, because these levels will hit at some point. One of these gaps has to fill. We're still, trading in the channel chopping, right? So, I don't think we're just going to go straight back down to fill the 404 gap, but it doesn't matter what I think. It matters is how the SPY reacts to my key zone levels. But I'm leaning more towards a bullish micro short-term reversal in between the range of 406.70 to 408. Like I said, if it goes under 406.70, cracks, and then it spikes back up, pushes down, forms lower highs, then it's bearish, but I wouldn't play puts. I would just wait for calls at 404, right? So write down all that. Now, let's say it has a short-term micro bullish reversal heading into tomorrow. What would be other levels where we can potentially look to play puts besides 415.84? So if I were to attempt puts tomorrow, these would be my levels. And again, these are quick scalps. We're not looking to hold long. For swing trading, you need confirmations on the daily. So the way I swing trade is I wait for a bullish candlestick at support, key level, so this gap right here, and then I wait for a bearish candlestick on daily at resistance. Those candles are not confirmed and determined until the market is right about to close, once the daily candlestick is confirmed, right? So what you need to understand is in terms of puts, the levels that I would be interested in potentially scalping a put. Now, this is not best setup at best price, but the mid 410, I'm seeing a lot of previous support right here at this 410.30, at this 410.50, at this right around here, this 410.30 and this 411 zone. That zone, 411 to 410.30, in between that zone, that resistance zone, that's where I would be looking to hit puts for a scalp heading into tomorrow. 410.30 to 411, 411.20. You can write those down. 411.50 as well. 411.50, 411.20, 410.50, 410.30. That's my zone for puts. So again, heading into tomorrow, our zone for puts, 410.30 to 411.50. Higher level the better. Can't go wrong at 411.50. Zone for calls, 406.70 to 408. If it cracks, then 404. Super simple plan, man. And do you guys understand how I came up with that, right? So here's how I come up with that, right? You have a lot of previous support right here towards 410.30 to 411.50. Since it had such a nice drop, if it spikes back up, initially the first reaction should be a rejection. So wait for support to crack first, right? Had a nice drop. If it spikes back up instantly, then it should reject the first try for a quick scalp on puts. In terms of calls, I'm seeing potential short-term reversals at 406.70 to 408 zone for a bullish move to that 410 zone, right? Obviously, I wouldn't be holding till 410. But what I'm seeing is the way this chart looks to me personally is it looks like if we get a small drop to 406.70 to 407, if we get a drop tomorrow, it's likely going to be a great opportunity to dip buy calls. And again, if it cracks under 406.70, forms lower highs, and you're in calls, there's no reason for calls. You cut the loss, wait on the sidelines, buy calls at 404. Don't chase the trend with a poor risk to reward ratio. I don't care if SPY's bearish at 407 and it goes to 404. It's still a poor risk to reward ratio. But that doesn't mean that you go with calls, because if it's confirmed bearish, you have to cut your loss no matter how good the risk to reward ratio is, right? So be aware of all this, man. But look, man, I explained it very, very well. My analysis should be on point. This should be a super simple overall day. The way the daily chart looks to me is personally, it looks like we get a small drop, 406.70 at the lowest, then a bullish micro bounce, nothing too insane, and then it drops again towards 411.50 to 410.30. That's how I view the market heading into tomorrow. In terms of my macro analysis, like I said, swing trade puts at 415 if there's a bearish candlestick on the daily chart. So you can go ahead and Google what do bearish candlesticks look like, and then if you see them form on the daily chart, that's your confirmation. Wait right before the market close, right? You see the bullish pin right here on daily, bullish pin right here on daily, key support. What does it do? It keeps on going higher, keeps on going higher, right? If you see that at the 404 gap, there you go. If you see it at the 415 gap, bearish confirmation right here, bearish candlesticks, then swing trade the puts. Great swing trading opportunities coming up. So the way that I'm viewing the chart right now, and again, you have to see how it reacts, you have to use confirmations, but the way I'm viewing it is, I don't think this gets off that easy where we just fill the gap at 404 tomorrow. I think we bounce in between the range of 406.70 and 408, pop back up to 410, 411, and then we drop again towards that zone. That's how I view it. That's how I see it. My zone for calls tomorrow, 406.70 to 408. My zone for puts tomorrow, 410.30 to 411.50. Obviously, if we go to 404, I hit calls. Obviously, if we go to 415, I hit puts. Again, scalps. If there's confirmation on daily to swing trade calls or puts at those levels, 404, 415, then I will swing trade the options, which is not determined and confirmed right before the market closes. That is how you trade the best setups to the best prices. That is how I come up with my overall levels. What you need to understand about the channel is we are towards the lower end of the channel. The way the daily chart looks to me in terms of pattern recognition, it looks like we're going to be getting a spike at 406.70 to 408. That's what it looks like to me. See how you have these nice bearish candlesticks on the 30. See how you have these nice bearish candlesticks on the 30. Then it starts to bottom out in reverse. So look for that bullish 30-minute candlestick. Look at this. SPY drops in the morning. So if you see it dropping in the morning, you see that bullish 30-minute green. SPY drops in the morning. Same thing. Bullish 30-minute green. What does it do once it forms that bullish 30-minute green trend reversal candlestick, bullish candlestick? It starts to trend up. So be cautious of that. If you see it's dropping in the morning, right? Like it did the past 2 days. It dropped in the morning. It dropped in the morning. Once it formed that first 30-minute green candle, that was the beginning and confirmation for an uptrend. So be aware of that and capitalize on the best setups at the best prices. Capitalize on these patterns, guys. Let's crush it tomorrow. I'm seeing a very easy day, simple day, setting up for tomorrow. Let's do very, very well, and let's continue to stay green. I will see you guys heading into market open tomorrow. I'm seeing great patterns. I'm seeing great confirmations. And again, if there's no reason for calls, there's no reason for calls. But just avoid puts. If you see it, crack under this level, 406.70, and then it bounces back up, forms resistance, rejects again, that's bearish. It's going to try to fill the gap. I don't see that happening, but it doesn't matter what I see happening. It matters is how this actually reacts and what confirmations and patterns the market is actually giving us. We're not just going to blindly buy calls into bearish 30-minute candlesticks, but if we're interested in calls towards 408 to 406.70 and it's dropping, but then we see a bullish candlestick on the 30-minute or whatever confirmation indicators you want to use, you could just see how well, though, when SPY's selling off and then it's got the first bullish 30-minute candle, when SPY's selling off, then it's got the first bullish 30-minute candle, it starts to go up. It starts to go up. This is why I was telling people early today before FOMC to avoid puts. When we were at 410.50, I was alerting calls at the low of day today before FOMC at 410.50. Then I was hitting puts during FOMC at 412.50. It was a great day, folks. If you want to be a part of Trader Society, if you want to learn how to trade the best setups, the best prices, if you want to surround yourself with the best traders, I'm telling you, Jim C made over 50K today. Top G made over 40K today. They absolutely crushed it during FOMC. Look at how much opportunity this market has to offer in terms of scalping quickly in and out. You could have scalped it both ways. I was overall bearish on the trend. For today, later into FOMC, I was overall bearish. That's why I started to avoid call options. I didn't do any calls during FOMC. I mean, you could have had great opportunities for calls, but I was overall bearish. That's why I was avoiding, right? I didn't want to scalp against the trend. Can you make money scalping against the trend? Yes. There's plenty of great dip buying opportunities towards this, 411, but overall, it's sold off. But just look at the opportunity for puts at this 412.50 resistance, 412.50 resistance. One opportunity, it crashes. Another opportunity, it crashes. That's two opportunities. 3, 4, 5, 6, 7, 8, 9. There was over 10 opportunities to buy puts at great prices. And there was many opportunities for calls if you're going against the overall trend. But it's just crazy, man. Today could have been one of those days where even if you didn't have a large account, you could have made 5 figures. I mean, with the account my size, if I were to go hard on the trend, I could have had a 6-figure day. I ended up, losing 3K initially, and I cut my loss quick. I'm proud of that. I have no regrets for getting out of that, even though if I would have stayed and I would have banked, I did what I was supposed to do. If I would have held, I would have lost a lot more, but if I would have held longer, I would have made a lot more. But I cut my loss quickly, lost 3K, lost 10% on my first option contract. Then I sized in bigger when there was a confirmation on my next trade. Same price, same entry, but I got a nice confirmation. I added nicely because I got a nice confirmation. And I did very, very well. Made 17K in 5 minutes on the next trade. Then I called it. Man, if I would have went hard, it could have been a 6-figure day. But look, I'm going to show you one trick right here. Well, how do you tell if something's going to drop? So look, I'm going to show you one trick right here. Write this down. If you see a stock have a big pullback, right, an overreaction, look at this. It topped at 413.50, had a massive drop. This is what you want. You want it all to happen quickly. Quick spike, quick crash. It dropped all the way to 411, $2.50 drop within 5 minutes. If it instantly spikes back up towards this resistance level, how can we actually confirm that it's going to drop again, right? Instead of just trying to blindly short a double top, how do we actually confirm if it's going to drop again? So let me show you. I'm going to draw 2 lines. These 2 lines are your resistance. This is a resistance level. This is a resistance level. It has big downside potential, which is big upside potential to go short for put options, right? So how can you tell if it's actually confirmed bearish? I'm going to show you. Take a look. This right here is a resistance level, and I do this with 1-minute candles. This is a resistance level. SPY had a breakout above resistance. Just because a stock has a breakout above resistance doesn't mean it's bullish. Now, when it pulls back, and if it bottoms and bounces at that previous resistance, that means it's bullish. So right here, it bounced off previous resistance, bullish wick, that's bullish, and then it went higher. How can you tell that it's going to drop and the trend's going to be confirmed bearish like last time? If it cracks this previous resistance right here, this 412.70, if it cracks this support that formed at this previous resistance, right? So if it cracks that level, that means it's attempting to go bearish. It's attempting to go bearish if it cracks this, right? So if you see it drop under, what do? Okay, so it drops under, it has a nice pullback. It's attempting to go bearish. So what do? If it spikes back up towards that previous support level and it rejects, so right here, it rejected right here. I was hitting puts right here because it was forming resistance. You see how it's forming lower highs? See how it's topping out? See how the highs of these candles are at the top? See how the low of this candle is at the bottom? See the difference, right? So I played puts right there. Now, if it spikes back up and turns previous support into resistance, you see the wick, you see the red candle, see the wick, see how this is now a top wick, bottom wick, see the difference, right? If you see that previous support reacting as a resistance, that means the trend is going to flip bearish. That's why when this candlestick closed bearish wick like this, not a bullish wick like this, I hit puts and I added nicely and it dropped instantly. You have to be quick and get in like a light, man. Watch my last live trading video. That is professional trading. The reason why I hit puts was it was at major resistance. It cracked support and it started forming lower highs, which is bearish. It was forming lower highs. See how this candlestick right here, this bullish, see how this candlestick is bullish? See how this candlestick is bullish? Well, what's the difference? Why did it drop if it's a bullish candle? Why did it drop here and it go up here? It went up here because this is a previous resistance level. It bottomed at previous resistance. That's bullish. It dropped here because the top of this candle is at the previous low of support. The low of this candle is at the previous resistance level. That's bullish. But it's bearish because it's forming a roof. It's forming a resistance level at the previous low, at the previous support, therefore it drops. So I took starter on puts. Then as it was bouncing back up, I told you guys, if it starts to reject this level, that means they're turning previous support into resistance and it's gonna start to drop. So I'm gonna add to puts heavy. And when it closed like this, as it was closing like this week with the wick, I hit puts and it went from 412.50 all the way down to 410.30. It dropped like almost 3 points in 4 minutes, and we banked on that. And then Top G alerted calls literally at the lows of this at the previous closing price. Absolutely insane play on calls. And then I just called it from there, man. But I told people, I'm thinking bearish close. I'm going to sit on my sidelines. I'm already up nicely on the day. I don't want to risk giving back the profits. Had a great day, and I sat on the sidelines. But I told people, overall direction is bearish. I'm going to sit on the sidelines. And then, how do you short a key breakdown successfully? You wait for a massive crash. Your support is at 411 and 410.30. If the SPY has a nice drop, this is a nice drop. It went under 410. It dropped all the way to 409.30. It went lower to 408. If it instantly rockets back up to the previous support and you see the wick, see the top wick, see the top wick, see the bottom wick, you see the difference, right? So wait for the support to crack. Miss out on it. Let it drop. Let it have a massive drop. When it rips back up, forms the resistance, forms the top wick. See, this is a bottom wick. See how that's bullish, and then it goes up. Well, look, this is the top wick. The same thing I just showed you earlier, right? Top wick, previous support, short that, short this, short that, boom. Sell the dip, Don't hope for support to crack. That's how you successfully short key breakdowns and identify when trends are actually bearish. See, there was no reason to be shorting at a 411 here, because it never dropped. It just bottomed with bullish wicks and then it bounced. But right here, see, we're not trying to guess. We're not trying to guess and say, oh, now it's going to crack. No, we miss out. Wait for it to drop first. Then when it rips back up, if you see the top wick form at that previous support, like I did at higher resistance, right? So I like to do this at key resistance. I don't like to do this at the lower levels, even though it worked at the lower levels. It's more poor of a risk to reward ratio. Then you hit the puts. Now, I like to do what I just taught you. Did the same thing, just at a higher price and resistance. That's what I like to do. I don't like to do it at the lows. It works both ways, but the risk to reward is much, much better at the highs, and you're at less risk of getting caught up in a trap because it's such strong resistance. That's the game, man. I will see you guys tomorrow live. We are going to absolutely crush it. If you want to be a part of Traders Society, it's going to be the first link down below in the description. You get instant lifetime access. It's a one-time fee. Traders Society. You get access to the traders, to the networking opportunities, to the moderators. We have several traders in here who are consistently crushing it every single week. If you want to surround yourself with those individuals, if you want to get the right education, if you want to learn how to master trading the SPY, trading options, trading large cap stocks, right? This is the right team for you. You will get access to the chat room, the moderators within the chat. You will get access to the voice channels, the live trading sessions, the live trading stream. That video that I just posted before this, that was a live trading session. That everything within that video, members saw that live on stream and also live on the voice channel within Discord, real time. If you want access to everything, real-time trade alerts, the Red Education, the courses, the video lesson library, everything is included below. It's all bundled together. It's a one-time fee and it's lifetime access. It's the first link down below in the description. I will see you guys tomorrow live at Market Open.